So in my last video, I talked about the weaknesses of my trading strategy, the break and retest. And in today's video, I want to break down the strengths. I want to share with you a live trade that I took on the S&P 500 ETF. And I want to share with you when this setup sets up correctly, when the price action is correct, when the market environment is in favor for the break and retest, how powerful this strategy is, and how great the risk to reward is when you take this setup. As I talked about in my previous video, it is very important to understand the strengths and the weaknesses of what you trade, the strategy you trade, and this is a great example today of a strength of the break and retest, what type of price action is necessary for this strategy to work out, and how great the risk to reward is. That is the number one thing in my opinion, how great the risk to reward is when this strategy sets up correctly. So after watching today's video, I hope you guys do enjoy it. This is going to be my last video of 2022, so I want to say thank you to everyone out there that's been supporting the channel, that watch the videos, that watches the live streams, everyone that comes every morning, almost 1,500 of you on average every single morning at 8 a.m. waking up early to watch the live stream. It means a lot to me, and I hope that we can continue that momentum into next year and have a fantastic trading year. So we talked about in the previous video, when we went over the weaknesses of this trading strategy, we talked about how if there is a straight up move to the upside or downside without any pullbacks, without any break and retest, without any dead cat bounces, if it's just a one direction move out of the gates, it is very difficult for me to catch these moves. Psychologically, mentally, emotionally, I do not like chasing moves at all. And when I see these straight up moves, something that I showed you in previous videos, it's very difficult for me to catch these moves. Now, when we have some actual market structure, something like a pre-market low, a pre-market high, when we have the market start to trade around those levels, you can start to look for these break and retest, and you can start to formulate real trade entries. So what you see here on the screen, this is the S&P 500 futures. We're also going to look at the S&P 500 ETF, and what you'll notice here is we had a pre-market low of around a 38.50 level. This is a key psychological level, and this is also the pre-market low from the morning of, this is the morning of the 28th. So this is yesterday's trading day. So we can see we had this 38.50 pre-market low. Now, I am always watching the pre-market low and the pre-market high every single day that I come into a trading day. Can I find a rejection of the pre-market low? Do we have a break and retest to the downside? Do we have a demand bounce off the pre-market low? If we're looking at pre-market highs, do we see a rejection of pre-market high? Or do we have a break and retest of the pre-market high for continuation to the upside, right? These are things I am always looking for. So what we can see here, the pre-market low was around 38.50. In the morning, as the market opened, we held that 38.50 and had a straight up move to the upside, a move that I will never catch. I will typically never catch this type of move straight to the upside, no pullbacks, no entry points. You could have went long here with the idea of having a support at the pre-market lows, but that just happened a little bit too quickly for me, and I missed out on this trade. So we can see we moved back lower intraday. We moved back lower, and around 10:26 a.m., we broke below the pre-market lows. Now, in this scenario, when we break below the pre-market lows, instead of just continuing lower and never dead cat bouncing, which is what I talked about in the previous video. In the previous videos, we talked about if there's a flush of a key level, like this was at the pre-market low and the intraday low, if it just continued without any type of dead cat bounce, it's very difficult for me to find an entry using the break and retest. But what we can see here in this example is that we got the exact dead cat bounce that I look for to find my trade entries. This is exactly what I was talking about in the previous video about what I need to set up to find my trade entries, and it happened perfectly here yesterday. So you can see we had a intraday low, which was also the pre-market low. We had a break of that level. We had a retest of that level. And you can see right here that we turned both the pre-market low, the intraday low, into a rejection point intraday. And at that point, that is exactly what I need to find my trade entry. Now, I want to talk about why this is so important. Not just because you find your entry, not just because you find confidence or you're comfortable in taking the trade. It's about the risk to reward and knowing where your stop loss is when you get into a trade like this. If you get into a trade that is just straight to the downside or straight to the upside, it is very difficult emotionally, mentally, psychologically to have a stop loss level. You don't know exactly where you're going to stop out. You're getting in at a random time, and you don't know what that structure is, and you don't know where you're going to stop out of the trade if you are correct, which is going to happen no matter what. You will always be incorrect when you're trading in the market. So we can see if I'm getting short here on a break and retest of the 38.50 level, in this case, it's around 38.52. If I'm starting to get shorts here around this area, I know that I have to see the market stay below that retest level. If the market was to break back above 38.52, break back above the intraday low and the pre-market low, I have to get out of the trade. The trade idea is no longer valid. So you have that black and white idea when you get into a trade off a break and retest. You say, okay, I'm getting in short here. Pre-market low, intraday low, turning into a rejection point. And if we get back above that level, I am out of the trade. Now, just simply talking this out loud, telling yourself this when you're entering a trade, I believe it increases the chances of you actually sticking to that rule. Knowing that, okay, I have to get out at 38.52. I cannot hold this if it continues higher past that level. I have to have that structure. I have to have that discipline. And if you guys listen to me trade live, you know that I say this all the time. I'm always saying, okay, stop out over 38.52. If I see it over that level, I am out. And talking it out and talking through it really does help me stick to that discipline, and it gives me that strict stop loss level, which keeps me from taking large losses. So you can see after getting in on this trade, you can see the ES had a very nice slip to the downside. After breaking that pre-market low and turning it into a rejection point, you can see the continuation that came in. I'm going to go ahead and play the live recording in this video. You can see how I traded this S&P 500 trade. I'll also go over to the SPY ETF. It's the same exact price action, the same exact chart. Here it is right here. Pre-market low, intraday low, S&P 500 ETF, break and retest right here. And you will see in the live recording when I entered this trade. I got to take this on the SPY. I'm going to take a SPY put with a stop over 381.10. Looking for this 38.50 rejection to continue lower. Looking for 10.9, looking for the NASDAQ to stay under 10.9. This one looks good though. I like this 38.50 rejection a lot. The fact that we're getting stuck under 38.50 should lead to weakness. I'm in some SPY puts with a stop over 381.10. I like the break and retest at 38.50 on the ES. I want to see it stay under that. But I also can see some of these strong candles on the bottom side of these wicks. Bottom side of these candles, so it looks like it's trying to hold that 45. I just want to see the ES stay under 38.50. Still getting those rejections there. NASDAQ still rejecting 10.9 as well. Stop is 381.10. The rejection of 10.9 is keeping me bearish here on the NASDAQ. I still love the supply rejection on Microsoft. I think that's looking really good. All right, I'm taking some off SPY there. Perfect. A little bit off there. Wow, that's a big win. Took half off pretty much right at the bottom of that tick, so that's good. I took them off at 10:51 in 6 seconds, so about 6 seconds into that candle. All right, I'm out. I'm taking that. I don't like what that was. I'm just going to take it off. All right, good win there. Just playing it safe here. I had to get myself out of that hole. I was in a hole that I wasn't really comfortable in. Too big of a hole for me today. Don't like going down 500. So there are a few things that I want to note out about the live recording if you did watch it. I did get out of the trade prematurely. This was a fault of my own. I had a really choppy morning that morning. I was sort of getting messed up on a few other trades. I was 0 for 3 to start the morning on a few small losers, but I was able to get back in the green and take profits on this S&P 500 put. I took it early. I got back in the green on the day. It was getting late in the day. It was around 11 o'clock when I was getting out of this position, and I simply just wanted to take my green day and run. Not the best way to think, not the best way to manage a trade. I could have made a lot more money if I continued to hold that position, but after having a really choppy morning, getting back in the green on a really nice break and retest setup, that was it, right? I was done for the day. I was checked out. I made my losses back, and at the time, that was my mentality. Whether that's right or wrong, I'm just being 100% truth with you guys, and that is exactly why I got out of that trade, which in my opinion, looking back at this trade, it probably was not the best exit. So to wrap up this video, I just want to go ahead and reiterate once again the strengths of the break and retest and walk you through this one more time. I hope this video made some sense to you, but we can take this example once again and look at it once again. If the market dropped below 38.52 and just continued lower without any type of dead cat bounce, no retest of the key level break, I would have probably not caught this move. But what happened here yesterday, we had the break, we had the dead cat bounce, we had the retest of the pre-market lows and the intraday lows, and that is where you actually find a trade setup. There's no chasing involved. There's a real structured trade idea. There's a clear stop loss level. Everything sets up beautifully. That is when I like to strike. There is always going to be days where we have huge downside and huge upside moves without retest, and those are the days that most traders get FOMO. They start to make bad decisions. They start to chase. I'm here to tell you, stay away from those days. There are days just like this that I'm sharing with you today that happen all the time. Those retest levels, they show up, and those are the trades you want to be taking. Stay away from those chase trades. Stay away from chasing straight upside and straight downside. These retest trades show up, and these are the ones that you want to take advantage of. I want to show my appreciation to you and everyone else out there for a great year of 2022. I hope you guys had a great year as well. This is the last time you're going to see this setup for about a year. I'm moving out of the current house that I'm in. I'm moving over to Miami, Brickell, Miami, and I am going to be having a new apartment, new setup. So I hope you guys are excited to see that. We'll have that starting 2023. The first live stream of 2023 will be in a new apartment, a new setting. So I hope it's a good motivation for me, and I hope that you guys enjoy the videos and enjoy the content coming into next year. Thank you guys again for watching. Press that like button, subscribe to the channel, and I'll see you guys next year. Peace.